G'day, I'm Nick Samios. Welcome to Lunch Money, Australia's leading show about workouts and special situations, brought to you by Hermes Capital, hermescapital.com.au. And today we have what is a very special situation. We're going to be talking about the IPO of Intellicare, and it's special, obviously, because of the situation that we're in now in this COVID environment. And hopefully we're going to learn some interesting lessons about how exactly it is you go about raising capital in this kind of environment, and hopefully there'll be some transferable tips that we talk about. We've got two of Intellicare's directors with us today. I'll introduce them one at a time. I'll start off with Scott Taylor. G'day, Scott. How you going?
Yeah, very well, thanks, Nick. Thanks for having me.
I'll start off now. So, Scott, you're a non-executive director with Intellicare. But obviously you're also the partner at Taylor David Lawyers in Brisbane, and I guess you're more famous for restructuring, certainly in my world. And what else is keeping you busy this week?
Really just assisting people to access the stimulus packages, making sure they're aware of what packages are available to them. There are different packages in different states, so not all are applicable to everyone, and there's quite a few that have already shut up. I know the Queensland state government stimulus package, I think, stopped accepting applications on the 19th. So there's some urgency to a degree for people to actually put their applications in, and we're just ensuring they're educated enough to ensure they are getting in time.
Right. Because you do have, I guess the packages are a little bit different state by state. And are you finding that people do need assistance in putting them together?
They do. I mean, a lot of people don't have all of their financial data that is typically required for the application process, and there are quite a few that may fall short of proving for one element that might fall into the special case category that requires some assistance putting together a bit of commentary around that in order to get them over the line. Right.
Okay. So a little bit of finessing.
Very much so.
Yeah. Okay. I guess I guess you're probably like when it comes to the other big ticket items, we're all just still waiting to see. There's a little bit of inertia, well, a lot of inertia. Certainly we're seeing, certainly around deals. People are still waiting to see what happens, and I'm sure there'll be some kind of announcement from the government today about the covers coming off. Okay. Well, I'll bring in now the CEO and MD of Intellicare, Jason Wallen. How you doing?
Very well.
You've sort of been through these sorts of challenges before. I know that you started off your career as a pilot in the RAAF.
Yes, I've had quite a sort of eclectic career, non-typical background being a CEO in a listed company.
Yeah. And so you were in the RAF, 15, 20 years ago?
Yeah, I started life as a pilot in the Air Force and did that for 22 years. And after a successful career, I wanted to prove myself in another arena and also have some stability for our family. And so I got out in 2008 and held a range of roles since then that have led me through various general manager, project, capital and BD roles, and finally to being CEO of a listed company.
I guess when it comes to the armed forces, the guys in the RAF or in the Air Force tend to be the more numerate, I suppose. I remember when I was a teenager, you sort of needed to be good at maths and physics, and so I guess all that project management and quantitative stuff would be reasonably natural to you. Was that a fair assessment?
Yes, it is. But when I was looking to get out, I spoke to a number of mentors who were in the private sector to work out what exactly it is that I had to offer a company, because there's not many opportunities for military pilots unless you're going to an airline. That's not what I wanted to do. Right. And it turns out that the one skill that is very transferable is leadership, particularly leadership of multidisciplinary teams. And that's something that's not taught from the ground up in the private sector. It's sort of acquired on the way through, but it's innate to your training and development in the military.
So when you say leadership of multidisciplinary teams, so just dumb that down a little bit for us.
Well, as a pilot in the Air Force, you are ultimately trained to become the Chief of the Air Force. and being able to manipulate an aircraft in the cockpit is not necessarily the skill you need to be Chief of Air Force. You need to rely on your experts across multidisciplines, such as engineering, operations, intelligence, finance, and it's the same in the private sector. All those disciplines are exactly the same. You'd only add on potentially sales and BD as the one that's slightly lacking. But nevertheless, in the military context, you still have to sell and you still have to develop the business to a high degree. So being able to coordinate all those arms and legs and bring them together under one strategic vision, that's the inherent part that I think I bring.
I think too, I mean, I'm imagining that as a CEO, as a leader of the business, all of those different parts of the business, any one of them could throw you under the bus. And I imagine that would be the same in the air. As a pilot, you certainly don't want to upset the engineers or anyone who's prepping your aircraft or whatever it is. I guess you need everybody, doing their bit to not throw you under the bus.
Yeah, as a junior officer, you're very much trained not by other officers. You're trained by the soulless sailors and airmen that are around you, and particularly the old and grumpy sergeants and warrant officers. If you piss them off, you find out about it with a clip around the ears very politely. Sir, don't do that again. And through that school of hard knocks, you quickly become assimilated to what your style of leadership needs to be. You can't mimic someone else or copy them. You have to develop your own style. Okay,
that's interesting. Yeah, I'm certainly training to be a grumpy old major or whatever it was you just said there. Now, I guess looking at your history, Intellicare isn't your first rodeo. You're involved in a company called Spookfish. Tell us a little bit about that.
Certainly. So Spookfish was a listed company that did geospatial imagery. It was competing another company, Nearmap primarily. And invented new technology. And so I took that from a stage in a similar point of its life cycle to Intellicare, where at that point it was founder-led. They'd come out of their R&D program and they're looking to commercialise. And it had very similar characteristics to Intellicare in the sense that it was a software as a service, a SaaS business model, so subscription-based primarily. And it was leveraging machine learning. In the case of Spookfish, it was feature recognition through AI, identifying things like roads and trees and things like that, whereas Intellicare is about predictive analytics. And lastly, I think Intellicare has the advantage of a significant macro tailwind with regard to an ageing population that Spookfish didn't have. But nevertheless, we were ultimately able to exit from Spookfish. We were acquired in December 2019 by a $30 billion North American private equity firm.
Yeah, that was quite a story at the time. We just had the West Australian headline there. So it must have been a bit of an interesting ride. It seemed to me that the price kept bidded up. Is that right? It started somewhere and ended up much higher.
That's correct. At the end of the day, we were able to double the enterprise value at the point of sale. When I started.
But now you got engaged in Spookfish in the last couple of years. I mean, was that your role to build it, to sell it?
Not necessarily to sell it, but certainly to grow it as fast as I could. So there was a mindfulness that a sale might be the exit strategy, but I didn't really let that distract me. I'm just trying to grow it fast. And bring together all the pieces, as I said, the arms and the legs. So the various founders all had significant expertise in their fields, whether it was technology, whether it was software, or whether it was sales. But they needed to come together under one coherent banner, so to speak, and execute on a commercialization strategy. And we sort of pivoted away from, in Spookfish's case, where the product was the image. I felt the image was going to become commoditized, and the real product was the data and the AI and the analytics that fell out of the image. And it's a similar strategy in Intellicare.
Yeah, that's very interesting, actually. Yeah, okay. Yeah, the data was the gold.
Correct.
Yeah.
So to my mind, if I start worrying about share price and I start worrying about exit strategies and those kinds of things, that's a distraction.
Yeah, sure.
I sort of liken it to my time in the military, where I spent. I was fortunate enough to command our forces in Iraq. And during that period, I had to operate on and off out of Baghdad, a very volatile little town at that stage. And we were operating out of the Saddam Hussein's palace. And I was standing in line at Subway because it was an American headquarters, and they have Subway and McDonald's transported in, would you believe, in the demand levels. And we would periodically get rocketed, where the insurgents, they picked up all the old arms from Saddam Hussein's era, and they put these rockets on a sand dune and fire them off into the pallet complex. And you'd stand there, I was standing there once, and boom, 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 and we were getting rocketed. You turn around, didn't hit me. Continue with my order for a half-foot sub, thanks. And similar in the business environment, it felt a bit like going through the IPO, getting rocketed from all directions. But you control what you can control, and I don't get fazed by things going on around me. I can't control those things. I will pivot and I'll respond to them, but I manage what I can manage, and that's what I try to do with Split Visions. What I'm doing with Intellicare, you can't let those other things like the market itself or an exit strategy per se distract you from your core goal.
I love, look, we won't dwell on it, but I love that pivot and respond. It sounds like an Air Force thing. Again, I'll let that go, but that sounds interesting. I guess the other thing that I'm just minded of was that the famous saying, it was the cricketer that said something about pressure is a measurement up your ass or something. I can't remember the exact quote, but I'm sure that lining up in Baghdad for Subway and having random attacks of loose ordnance being thrown at you, that'd be a little bit different to boardroom pressure as well.
Well, I taught students to fly in the Air Forces. I finished up training officer at Advanced Flying Training School, and I would say to the students, I can't pressure you. The only person that can pressure you or cause you stress is you. It's your response, and you can control your emotions, and you can control your response to the environment.
All right, look, we'll show just a little snippet of a video about Intellicare shortly. I was just very interested, and we'll just touch on it quickly. How did you guys meet? How did Scott? How did you meet Jason? Is it like a Tinder for NEDs, or what was the process?
Not quite, Nick. No, just a mutual connection that put us together. We were actually, Jason, you might probably be better placed to speak about the board and how it was built. But there was quite a bit of work going into restructuring the board.
Let's start off. Just we'll show the video just so people know what we're talking about with Intellicare. So Intellicare is obviously the business that is being IPO'd.
Intellicare has designed a solution that allows people to remain in an independent living environment for longer. Intellicare uses data from smart sensors easily and unobtrusively installed around the house, turning any home into a smart home. The home's artificial intelligence builds a normal domestic routine based off this data. It will alert family or caregivers to deviations from this routine. At any time, family or caregivers will be able to see that everything is okay via a daily message. If an issue is detected, the app will send you a push notification or insight. Okay, there you go. That was a snippet. So that's just for everybody watching. That's what we're talking about. So I guess I'm interested, partly around how you put a board together, Jason, but also how have you sort of funded pre-IPO? How's the business been capitalised?
Sure. So I came on board in August last year. And that was the point where they were starting to look at going through an IPO. The founders at that point had done roadshows, particularly overseas in the United States, and had been exploring the venture capital path. And there was an extremely high degree of interest at that stage. They knew they had something on their hands. And with in conjunction with their corporate advisors, which included JP Equity as our lead manager and Discovery Capital as our corporate advisor, they came to the conclusion that an IPO was the best path. I was introduced by Discovery Capital, introduced to them by one of the investors in Spookfish, one of the large investors there, who I guess rated what I did there and felt that I could add value to this company in a similar fashion. Scott came to us through JP Equity and his relationships there. So we wanted a board that had the right level of expertise for a listed company. It's quite different to how it was structured prior to listing. The company had very successfully had a number of capital raises via family and friends, the typical bootstrap path. But then with JP Equity, they led them through two series of raises pre-IPO. That got us through to the point where we could get to IPO. And we've just finished raising $5.5 million at 20 cents a few weeks ago.
Fantastic. I'm interested. I mean, Again, I didn't know a lot about it, and Scott mentioned to me a couple of weeks ago. I did a little bit of homework, and I guess with all the problems with nursing homes in this particular pandemic environment, it's almost like you're riding a wave in, I suppose. Is that fair to say?
That's correct. I think without trying to sound opportunistic, COVID-19 is beneficial for us because it's done two key things. Firstly, it's accelerated everyone's digital transformation, and in particular the aged care industry I characterise as laggards with regard to technology, but now they're becoming adopters. And secondly, more broadly, it is highlighting the need to protect those that are ageing, and that the preferred outcome is not to go to a nursing home, is to age in place in your own home, and not have to sell your home. And a nursing home is probably not the place you want to be. They've always been risky. The average lifespan, unfortunately, of someone in a nursing home is 18 months. If you can stay in your own home and use technology like Intellicare to do that, it's a much better outcome. And that realisation is now front and centre in people's minds.
I'm not sure if you've got something that sends off an alarm when the people breach the perimeter of the house, but certainly I need that. My parents haven't quite got the hang of shelter in place just yet, but we won't dwell on that too much. How have you gone? One of the things, obviously, with an IPO is getting some sort of a handle on the valuation of the business. And I imagine that there's obviously a lot of blue sky, both in Australia and abroad, particularly in the States, I guess, is your primary market. I mean, how do you go about placing a valuation on a business? And did that suddenly change when this pandemic broke out?
No, it didn't change. We'd already set the valuation prior to it. And I don't think it was worth revisiting that, other than acknowledging that it was probably going to be a contributing tailwind for us. The setting of the valuation is a bit of a dark art, really, and we wanted to make sure we positioned it at a price that was acceptable to the market, that had allows our investors to have access to upside without underselling the business. So we looked to keep it at around the $14 to $15 million market cap, with an EV at around 10 to 11 million, and we felt that was the right position for its stage of development. The company is post-revenue, and that was important as part of the valuation. It's not an R&D company. It's not something that is yet to be fully tested out and trialled. But it doesn't have a strong revenue stream to be able to point back to and develop multiples, for instance. So it is a bit of a conversation that occurs between the board, the founders, and our lead managers, JP Equity.
But there's obviously proof of concept, and it's been commercialised and all that sort of stuff. So, like you say, it's not a pure startup. It's early stage, by all means. But
that's correct. And I think that was one of the reasons why we were able to get it away during the COVID-19 crisis. Initially, we'd done the roadshow groundwork prior to that. I'd done 60 plus investor presentations.
Right.
But when COVID hit, it was a bit like catching a falling knife. So balancing the brokers who had trying to catch this falling knife with those that thought there might be a V-shaped recovery on the other side. And initially everyone was in bunkers and it was just hard to get bandwidth because they were just trying to preserve the wealth of their customers. But then they saw buying opportunities that came out of that. And there were three sort of key aspects that they looked for, I think, within Intellicare. Firstly, it was a good product and it was post-revenue. Secondly, there was this large macro tailwind with a growing and ageing population contributed by COVID-19. But lastly, I think this is a critical one, it's easy to understand. People get it. Everyone's got a personal experience with a parent or a grandparent that they're concerned about. So it's not like you need to discover or learn about rocks to China or drill results or understand deep pathology results or any of those things in the typical technology or an R&D or early phase companies. You can very, very much personally understand what we're trying to achieve. And once people, it's a bit like the Warren Buffett things, he invests in companies that he knows and understands and consumes himself. It's the same with Intellicare.
And what about yourself, Scott? What sort of, when you came to this, how did you see the opportunity?
I had an immediate understanding based on a personal experience with my own family. So it resonated almost immediately that something like this could actually be of assistance not only to me, but many others around me. And as Jason rightly pointed out, it's something that people quite easily understand and can quite easily relate to as well. So for me, that was incredibly exciting. And from there, things progressed, and I joined the board in, I believe, October last year.
And I guess, so the roadshow was done by the time COVID hit, or you were still in the late stages of the roadshow?
We'd completed the roadshow, so we were poised and ready to go. And we were looking for a timing mark. So there was post-roadshow, there's a bit of work to do, obviously, with the ASX and getting everything accredited and sorted out. And then COVID hit. And again, so it's like standing in line at Subway waiting to get your foot on sub, and rockets come down. And everyone hunkers for the bunkers. But we then looked for a window of opportunity. So after a short period, we saw that it had stabilised, the market had stabilised. We spoke to our brokers who are now coming out and looking for those buying opportunities. Prior to that, you couldn't even get them on the phone.
Right.
They were just trying to survive at that point. So
Right.
we waited hard. And then when we felt that there was a point where it had levelled, we came out and we launched. It did fall momentarily afterwards, but we just plowed our way through that. Again, control what you control, keep getting the message. Yeah. And those brokers and investors that got it and understood it, for them the story hadn't changed. And in fact, we have a number of investors who sold out at a loss from their previous positions to buy into Intellicare.
Wow.
That's a huge responsibility that now I bear. But I'm happy to take that. But it demonstrates that the people were investing for the fundamentals, not just to look for a short-term bounce.
Yeah, yeah. And what do you? So what are the next challenges in the business?
Executing.
Yeah.
It's all about executing. And it's all about sales. So it's executing on that sales strategy and going out through two formats, B2B and B2C. Yeah. When people think of aged care, they think of residential nursing homes, people in aged care. And to be honest, Nick, that's not our primary market. Our primary market is 5 times larger than that. It's home care services. Yeah. These are organisations that are delivering services to people's homes. And those people have home care packages, funding from the government, and Intellicare is 100% subsidised by those packages. Right. There's about 1.2 million people in that market. So we want to market to them through their home care service providers. Yeah. And then second to that is our B2C market, which again is another 3 to 4 times multiple of the home care market. There's about 3 to 4 to 5 million people in that and growing. There's a whole... Sorry, go ahead.
I was going to say, have you had to change the marketing plan? I mean, at the moment, it's a bit hard to... I know in our business, we've got people dedicated to sales, and their job, there's a lot of foot slogging. They make meetings and go and see people and all that sort of stuff. And obviously, it's a little bit difficult to do right at this very minute.
No, we haven't. In fact, our workload's increased because of the current situation where people have started coming to us in greater numbers. Yeah. So our question is the same as all startups. How do you scale that? So there is foot slogging. There are direct sales team who work the B2B market. But in parallel with that, we're setting up our off-the-shelf product that will be able to be marketed through e-commerce and digital and retail channels. And that's where we really start to scale, where we market to those people who don't receive Commonwealth funding, but may go to Bunnings, JB Hi-Fi, Harvey Norman, and buy it off the shelf from there.
Wow. So it's in a box, basically.
Correct. Wow. And it is now. It's just that there's things we can do to improve that off-the-shelf product experience and to put in the back-end support, the customer experience team that sit there on the chat line, the user guides and those kinds of things. And some things we do within the app to make that journey, that customer journey, a little bit smoother than it currently is.
Yeah. Okay, that's interesting. Look, we could go down so many paths. As you said, there's already, certain service providers. I'm thinking of people that come clean the house, whack together some sandwiches and all that sort of stuff. There's a whole, there is. It's not totally blue ocean, but it's certainly a new slice. I'm wondering, as I said, it is a special situation given that obviously it's the nature of the IPO and the environment that we're in. Scott, what sort of transferable skills do you think there are in just broader capital raising, be it debt or equity? What things have you learned out of this process that you think are transferable?
Just in applying the Intellicare IPO experience from my personal perspective, I think it's important to note that Intellicare had proven systems in the field prior to deciding to list. So whilst it may have applications in the COVID-19 situation, the original plan to list was certainly not designed around or prepared with COVID-19 in foresight, of course. So even with this potential application, raising capital in a pandemic is certainly going to be challenging. The pool of potential investors, of course, was significantly decreased. But as Jason rightly pointed out before, we did have people selling out of their positions at a loss simply to jump on board and join this IPO. So the fact that we were able to raise the desired capital is certainly a testament to the Intellicare business itself, along with Jason and the wider team at Intellicare. So we've also been incredibly grateful to have the backing of JP Equities in Perth, along with Discovery Capital Partners. In terms of takeaway points, I think having a business with strong fundamentals is one of those takeaways, in addition to taking calculated risks with a well-conceived plan, and of course, just surrounding yourself with good people.
Good people.
Absolutely.
Yeah.
And if I could add something there, Nick, I would also say that with Scott, it's great to have him on board because, as I said, during the restructure, we look to have a broad skill set, and Scott often deals with companies at the end of their life cycle, in that crisis stage, and in a startup, you're in a different stage. So we're able to look and glean from what those lessons learned and incorporate them in the startup stage. So we're structured well and we're positioned well to avoid the mistakes that others may have made that he's experienced. So it's very, very complementary. It's very yin and yang.
Yeah, I'm just looking here. Scott said, you said fundamentals, and I guess I wonder if, I guess maybe a step one is sort of revisiting the fundamentals in a capital raising process, and I think communicating the fundamentals as well. Jason, I think, made the reference to Warren Buffett a bit earlier about, and it's a famous reference about not investing in something you don't understand. So sometimes if something is understandable, it's just about making sure that it's communicated clearly, and good people as well. Have you was your team fully in place, or have you built the team since COVID began?
Started with a great team. We've obviously built them out since then. The founders, Greg Leach, who's our chairman, and Mike Tappenden, who's our CTO, had already put their best and brightest into the team that they've used. Both those guys have been in IT and technology for 30 years. They've already built and exited from other companies, including Empire, EPD, another listed company. So they knew the kinds of developers they wanted to have on board. They brought them in and started it up. So I didn't have to do a lot of work there, although I will always emphasise that at the end of the day, it's all about the people and leadership of people, and why a military experience is very transmutable. 8% of the stuff is people, and people don't change. Yeah,
that's an interesting comment. People don't change. I don't know. Look, this whole pandemic thing. I think the world is going to look very different when we come out of this. But I suppose that what you're doing now with Intellicare certainly fits into that landscape. Scott, how do you think your role in your practice is going to change? I suppose we anticipate, when the shutters come off the economy, I'm sure that your phone will be running off the hook for your restructuring skills.
I'm expecting once the payments under the stimulus packages start to run out, that's when you're going to see a big hit and a big influx in inquiry. But once there is these packages available, keeping people floating above water, I think it'll just ride itself out until that point in time.
Yeah, look, systems certainly have a way of adjusting, so I don't think things are going to be quite as catastrophic as some people are suggesting, because there's always a natural balancing process that happens. But I think that, I think one of the interesting things is going to be that people have got enough capital to sort of hang in there until the gates open again. And certainly we're expecting that our phone will certainly start ringing a lot louder when people are looking for what I would call restart capital. I also wonder whether or not if there's a company like Intellicare, if they're the ones that have been able to raise capital under tough circumstances, maybe there'll be M&A type opportunities or other sort of non-organic growth opportunities down the path, do you think?
I think with adversity, there's always opportunity. So I think we'll see a number of those opportunities popping up over the next few months and beyond. And there'll be plenty of opportunities, so I assure you.
Yeah, sure. All right. Well, look, I think that we'll wrap it up just about there. I guess is there anything further you'd like to add, Scott, that I may have left out?
No, thanks, Nick. It's been great.
Great. Jason?
No, thanks, Nick. I just sort of had a message out there that it was great to see our IPO with bids in excess of what we're trying to raise. So there's demand out there, and I look forward to being able to deliver to those shareholders and for other people to come onto the register post IPO.
I just wanted to say that this is the first IPO in the pandemic, isn't it?
There have been a couple of others.
Right.
There have been two others. One did tremendously well. The other went down, but they're quite different. But the one that did very, very well, obviously, it also had a healthcare element to it. I think they went through to 2 to 3 times on opening, and it's still sitting at 2 to 3 times.
Right. Okay. All right. Well, that's fantastic. I mean, it's been a great opportunity for us to talk to you guys. We're very, very grateful. It's a unique story, and it's a wonderful story. So thank you very much. Thank you very much for coming on, and we wish you every success with Intellicare going forward. So we'll wrap it up there. Thank you to everybody for watching. I will say that there's some of you that have watched live on YouTube. We're also about to launch this as an audio on a podcast, so you'll be able to get us on Apple, Google Play, Podkicker and Stitcher and all those sorts of good things. And of course, if you go to hermescapital.com.au/TV, you'll be able to watch this in replay. So thank you very much. Thank you, Scott. Thank you, Jason. And thank you to everybody for watching. Cheers.